let's welcome in our next guest, Joe Mazzola, Head Trading Derivatives Strategist at Charles Schwab. Thanks for joining us, Joe. What were the biggest takeaways from last month's report?
Yeah, so we did see an increase for the first time in the last 3 months. It was small though. It's interesting, kind of given what the market's done. The rally off the April 8th bottom, just to kind of see that investors are still kind of maybe dipping their toes in the water a little bit and aren't jumping in head first. What we've kind of seen is moving maybe out of some of the single stocks into a little bit more ETF mutual funds. We're not seeing a lot of kind of the upside call buying that you might see when you get a move like we have. You're not seeing a lot of margin allocation, so people aren't basically loading up the boat. They're buying. And we got really good volume, really good activity in June. It's not something that's kind of stretching the limits. It's not something that I would call, the fear of missing out trade.
Okay, so interesting rotation into industrials and discretionary away from tech. Talk us through the psychology behind that.
Yeah, so I think that's part of it is that we've had such a big rally in the Mag 7, particularly like Nvidia. That was the number one sell, and so when they look at what can I rotate into, two of the discretionary stocks popped up as two of our top three, and that would be Tesla and Amazon. Tesla, in my opinion, our clients like to kind of do some bottom fishing, right? So when you see the stocks pull back, like about that 15% dip that we saw at the beginning of June, below the 280 level, that's where we saw a lot of activity that week on the buy side. And then with Amazon's just kind of been a steady mover all the way up, grinding up, and clients are adding that along the way too. So, Nvidia, like I said, is the biggest sell. Now it's still the biggest, holding in terms of client percentage of their portfolios, or percentage of clients holding it in their portfolio is a better way to say it. But it is something that we continue to see trimming into strength. And Sam, what's really interesting about that is for basically 2.5 years, this was number one on the buy list, Nvidia was. And for the second month in a row, it's number one on the sell list. It just kind of, it speaks to me of this, as you mentioned, the rotation, but also kind of de-risking.
Right. It's interesting, as I mentioned, into industrials. I mean, no doubt that speaks to also some of the themes around this reindustrialization, onshoring, which is what basically the tariffs are all about as far as Trump is concerned. Do you believe or anticipate that this could continue as far as a trend off the back of the big, beautiful bill and some of the clarity around tax?
Sure. And here's the reason why. If you look at strength in terms of sectors and percentages of stocks above the 50-day moving average, industrials is right up there amongst the top three. And if you look at best performing sectors, kind of year to date, industrials is number one. So that trade started back in April, and it's something that's continued all the way through. We'll find out more in terms of the tariffs and what that policy looks like. But as long as we keep hearing about the onshoring, as you mentioned, I don't see that trade stopping anytime soon.
Okay, and what were some other popular names bought throughout the month of June? I mean, you've mentioned Tesla, Amazon. Any others?
Yeah, Palantir was number one last month, number two this month. You look across the retail space. That is, it's been a retail darling, and clients have done well in that. Another one, which maybe kind of flies in the face of the de-risking, was Circle. And if you look at kind of what that stock did, it was up fourfold in the month of June. And if clients were able to kind of pare back some of that risk towards the end of the month and got out before the stock got cut in half, they did well. But that was really the only kind of meme stock trade that we saw that made the top five. So those are the ones that kind of caught my attention. I think the other thing that is really interesting is the survey, because along with the behavioral study that we do in the Schwab Trading Activity Index, we also ask them kind of how they're feeling. And the clients became more bullish, actually the most bullish they've been since December of 2024 in terms of what they're telling us. But as you mentioned, it's not necessarily something where they're reaching for tech at this point. If anything, tech is the number one sold sector across the board. It happens to be that they're moving into ETFs, they're moving into mutual funds, big movements into fixed income. And the one thing that they say, that could alter that is, could be news out of Washington, whether it's trade or and tariff policy, or if there's some type of more volatility around that.
Right, and just very quickly, I mean, as far as what was behind that bullishness, I mean, what's sort of driving that? I mean, is it what they're hearing as far as, perhaps some of the rollback of the tariffs or some pricing in or expectations of the Fed rate cuts?
Yeah, I think what they said specifically was that some of that volatility that kind of shook the markets back in April really started to dissipate, and as long as they feel that there is some type of there is some idea of what the tariffs might be. Now, remember, this was taken a few weeks ago, so before yesterday and today. So we'll see kind of what the July report looks like. But they also noted that a calming of the tensions in the Middle East helped quite a bit. So a lot of the geopolitical and kind of tensions. And then also the risk that we've seen in D.C. in terms of passing of the big beautiful bill, and then also in terms of kind of the tariffs and trade policy. As that starts to normalize, you're seeing less and less of fear of volatility, and you're seeing the options market too. I mean, look, we got a VIX trading at 1670 today. You would think with all of the things that are going on between now and say that April 1st expiration of trade and the tariffs. Boy, you would think that people would be buying in protection. They're just not doing it. Between our clients and the rest of the field out there, it really is this steady grind up.
Yeah, excellent snapshot. Thanks so much for that. Really appreciate it. Joe Mazzola there, head trading derivatives strategist at Charles Schwab, for joining the show.